Okay. Hi everyone. Very good afternoon and welcome back to CGB Mentors. So this is paper 4, Retail Banking and Wealth Management, and we'll be talking about retail banking in module A. So it's a short, quick module, right? And we have to focus only on what is important. So let us start. Question number 1 is, under which act is the banking system in India governed and what is its original name, right? So RBI, Banking Regulation Act, right, and Banking Act 1956, Indian Banking Act 1950. Here they are asking you that banking system in India is governed under which particular act? So that is Banking Regulation Act, also known as originally Banking Companies Act. Now next we have the nationalization of banks in India was carried out in how many phases, right? And obviously in which year? So we know that it was conducted in two phases, that is 1969 and 1980, right? These were the years. Now in 1969, 14 major banks were nationalized. In 1986, more banks were nationalized, taking the total number to 20. Right now the nationalized number banks, they are in 11 in number. Now, what was the major recommendation of Narsimhan Committee in the 1990s? What was the recommendation? To increase CRR and SLR, merge all public sector banks, liberalize the banking sector, introduce private and foreign banks, stop the nationalization of banks. See, giving a recommendation of increasing CRR and SLR was not possible, because if you have to increase the banking business, automatically you have to bring the CRR and SLR down, because until and unless banks are not having enough deposits, they cannot lend more and the business is not going to grow. So hence, liberalizing the banking sector was the recommendation, and over here introduction of private banks as well as the foreign banks, that was the norm. Now next we have, which of the following correctly lists the three levels of profitability? Three levels of profitability step by step. Number 1, what kind of profit you would calculate. After that and after that. So out of all the given options that we can see, option number B, which talks about gross profit, operating profit and net profit, right? So gross profit, it talks about your trading activities. Okay? Trading activities, along with that, all the direct expenses are included over here to calculate the profit. सारे direct expenses हम include करेंगे. But what about those expenses which are not directly related to manufacturing but still operating activity in nature, right? So those expenses we will deduct to find out our operating प्रॉफिट. ठीक है, उसको हम ऑपरेटिंग प्रॉफिट कैलकुलेट करेंगे, एंड आफ्टर दैट we deduct all kinds of indirect expenses, whether they are operating in nature or not, to calculate the net profit. So these are the three levels of profitability, that is gross profit, operating profit and net profit. Next you have, which of the following statement best describes the difference between profit and profitability? What is the difference between this? So profit is taken as an absolute number, while profitability is a relative measure of efficiency. ठीक है, relative measure of efficiency हम क्यों कह रहे हैं? Because over here in case of profitability we compare it, right? So it's a relative measure that compares the profit to the resources, cost or revenue. So it talks about, suppose I have told you that okay, my profit is 160 crores. It's fine, it's an absolute number, looks great, right? But what about the other things? I have to compare the 160 crores worth of profit that I have earned in relation with the sales that I am making. Okay? So if my sales is 1000 crores and my profit is 160 crores, together that is going to give me a better measure of comparability. So this is what profitability talks about. Profitability brings into picture other relative measures also to give you a correct picture of whether you are efficient or not. आप efficient हैं या फिर नहीं हैं. Now, which bank was formed by merging the three presidential banks during British rule and was later nationalized in 1955? So, as soon as the nationalization word in the 1955 comes into the picture, my answer over here is the State Bank of India, earlier known as the Imperial Bank of India, right? So this was nationalized. Now, which of the following risk is typically not associated with operations of commercial bank? Credit risk, yes, obviously it's the major kind of risk which a bank faces. Do we also talk about liquidity risk and market risk? Yes, right. So these are very specific to the bank's operations, but strategic risk is not something which concerns the bank so directly. Why it is not so? Because it is more associated with long-term decisions and not highlighted in the context of the core banking operations. आपके core banking operations में strategic risk, I'm not saying that it does not have the role to play, it does, right? But in comparison to the other kinds of risks which are listed over here, it does not have the very substantial role to play. Now, right now they are asking what is the current structure of Indian banking system as per the data provided. So, as per the RBI website, right now we are having 11 public sector banks, 21 private sector banks and 44 foreign banks which are listed on the RBI website. Along with that, I have also provided you the number on how many scheduled urban cooperative banks we are having, non-scheduled urban cooperative banks as well as the regional rural bank. Now, which of the following best illustrates the concept of net profit? Now, out of these, what would be the correct formula of net profit? Sales less cost of goods sold is going to give me gross profit. अगर मैं sales में से cost of goods sold minus करती हूँ, so I'll get my gross profit. Gross profit less operating expenses is if I'll deduct, I'll get the operating profit, right? Sales less administrative cost is not a comprehensive measure to do the net profit analysis. Okay, it's not a comprehensive measure. Then what would give me net profit? So when I will deduct taxes and interest from the operating profit, this is somewhere closer to the concept of net profit, right? This is closer to the concept of net profit. Now, what was the major effect of liberalizing the Indian economy in the 1990s? It increased government regulation? No. Closure of foreign banks? No. Entry of private and foreign banks and deregulation of interest rate? Yes. Increase in CRR and SLR? No. That was not the recommendation of Narasimhan committee कि आप CRR और SLR को बढ़ाएं, ठीक है? ये किसी भी तरीके से recommendation नहीं था. Now next we are having which of the following is the major source of income for banks? क्या है major source of income? Fees, sale of security, interest earned on assets, cash deposits held in vaults. So out of all the sorts of income or all the sources of income that a bank has, interest earned on the assets is something which formulates as a major income source for the banks. In the upcoming questions, you will see that how interest margins also impact the bank's business, right? Then we are having what is the accounting equation which is used in the banking to represent how banks fund their assets. So asset is equals to revenue plus expense. Asset is equals to deposit plus loans. Asset is equals to liabilities plus capital. Asset is equals to loans minus liability. See, banking business is not very different from the kinds of business that we see near us, right? It's not a bit different business. So the accounting equation which is relevant everywhere is also relevant in the banking business too, right? So बाकी जगह पे आपकी accounting equations क्या होती है? Assets is equals to your capital plus liabilities. That means if I have the assets worth 10 lakh rupees, either I might have purchased it from my own funds or I might have borrowed it. There can be only two possibilities and those two possibilities are listed over here. So assets is equals to liabilities plus bank capital is something which tells our answer. Now next we are having question number 13. Just a second. So which component is not considered in the calculation of net interest income? See, net interest income talks about what is the interest that you have earned less the interest that you have spent, right? So the interest you have received on loans and investments is going to be there as plus, and the interest that you have paid on deposits or the borrowings has to be deducted from it. Now the fees charged on the ATM transaction, this is a non-interest income. ठीक है? So that is why it will not be considered in the net interest income. See this? Now, why do banks use leverage? Why do they use it? See, leverage means what? That if you have 100 rupees, how much of that belongs to you? आपका खुद का पैसा कितना है? Basically, eventually we want to know that what is the relationship in your business of borrowed funds and your own money. So suppose I have, let's say, 100 rupees worth of total assets. ठीक है, मेरे पास 100 रुपए की total assets हैं, and I say my equity share capital is 40 rupees. So that means I'm suggesting that out of the 100 rupees that I have invested in my business, 40 rupees belongs to me. 40 रुपए जो हैं वो मेरे हैं. So this is what leverage means. Leverage means by utilizing the debt money, you are trying to give the benefit to the equity shareholders. Okay, we got that. Now, in the upcoming questions, wherever the leverage comes, remember total assets divided by your shareholders' equity. That's the formula. Basically, what I'm trying to do, so by using the debt capital, I'm trying to provide the benefit to the equity shareholders. मैं equity shareholders को benefit देना चाहती हूँ, right? So this is why banks use leverage. To increase the return on equity, this is the purpose why banks are using leverage. Now, what does a high net interest margin indicates about a bank? So that means it is efficiently managing its interest earning asset. अगर income ज़्यादा है, तो इसका मतलब आप अपने loans को better manage कर रहे हैं, right? Then you are having which of the following reduces a bank's ability to earn profit from all its asset? See, if you have money invested, if you are going to hold it in vaults and you are going to give it to RBI as CRR, which is not giving you any kind of interest, so obviously it is going to reduce the bank's ability to earn profit. Look at all other options. If you are doing increased lending, increased leverage, high loan to deposit ratio, basically you are giving increased lending and this is increasing your returns. So don't you think it's a good option to have? Now, if a bank's ROA is 2% and its leverage ratio is 10, then what is ROE? ROE का बहुत ही simple सा formula है. If you want to calculate return on equity, just a second. Yes, if you want to calculate return on equity, just multiply return on assets with leverage. Why? Because return on assets means net profit divided by your assets, total assets, and leverage also, I have just told you, assets divided by your shareholders' equity, right? So, see, eventually what remains? Net profit divided by shareholders' equity. This is what DuPont analysis suggests us, right? So just 2% multiplied by 10 and that is something your ROE, that is 20%. Okay? Now, what is the biggest risk associated with high leverage in banking? High leverage means if you are going to use the increased debt, अगर आप debt ज़्यादा use करने लगोगे, so what is the risk, right? So over here you might become vulnerable to the small asset losses. ठीक है? This is a problematic thing or the biggest risk which is associated with high leverage. Now, why did investment banks like Lehman Brothers collapse during the 2008 crisis? Because of the very same fact that they had excessive leverage and their assets got devaluated, right? Assets means the loans. And they were not having, loans became NPA. At the same time, for bearing up this particular loss, they did not have their own money. इस नुकसान को झेलने के लिए उनके पास में खुद का पैसा भी नहीं था. So eventually what it led to was failure. Now what happens when the interest rate स्प्रेड नैरोज, ठीक है, इंटरेस्ट रेट स्प्रेड नैरोज का मतलब आपका जो मार्जिन है वो कम हो रहा है, सो ऑब्वियसली बैंक्स प्रॉफिटेबिलिटी इज डिक्रीजिंग. Spread decrease means what? You are earning less, or it might also happen that your expenses are increasing. So that is why your margin is getting reduced. आपका margin जो है वो कम हो रहा है. So bank's profitability will decrease. Now a bank is considering increasing its leverage ratio from 10 to 20. You are going to increase it. So which of the following best describes the short term and long term implication? See, in the short term, your ROE, return on equity, will increase because the equity shareholders will be benefited by the debt funds that you are using, right? Debt funds are cheap funds. So if you are going to use it, it will increase the profit and return on equity would increase. But in the long term, insolvency risk also rises because debt comes with a condition that you have to repay it for sure. आपको repay करना ही पड़ेगा. So that is why your risk of insolvency is going to rise. Now, if a bank's NIM is falling while its ROE is rising, what is the most plausible explanation? See, if your net interest margin is falling, that means your efficiency has reduced. But at the same time, your net profit might be increasing in absolute numbers. Profit मेरा बढ़ गया है from 150 to 160 crores, but my margin is reducing. That means I'm not that much efficient, right? So out of this, the bank is increasing non-interest income through service fee. The bank is taking on more liabilities to increase leverage. The bank has reduced its operational costs. It is holding more cash and the reserves than before. So in this particular situation, bank is having more liabilities to increase leverage. As your leverage is going to increase, that means your debt interest will increase. That leads to interest margin being decreased क्योंकि आपके खर्चे बढ़ गए हैं. But by using the debt, that is a cheaper source of fund, you have increased the net profit, right? So this is why this is the best explanation. Example is also given to you. Now, a central bank increases the required CRR. What impact will it have on commercial banks' profitability? Profitability कम हो जाएगी because we know that the cash kept with RBI does not earn any interest. So obviously this is going to decrease. Now, which strategy would most effectively increase a bank's ROA without increasing the leverage? Return on assets कैसे बढ़ेगा बिना leverage को बढ़ाए हुए? So increase deposit rates to attract more customers. Shift asset composition toward higher yield loans. Okay. See, deposit rates को बढ़ाने से फायदा नहीं होगा उतना क्योंकि आपको पे तो करना ही पड़ेगा. And eventually what you are going to earn is not through deposits but by lending these deposits. Right. So we have to focus over here. Increasing the capital base, reducing the interest rate to increasing loan volume. No, that is not a correct thing. We have to move our asset composition towards high yield loans where we can earn more. जहाँ पे हम ज़्यादा कमा सकें, आपको उस जगह पे shift होना है. Right. Now, how would a significant increase in the non-performing loans will affect ROA as well as ROE, assuming all other variables are constant? See, आपका assets पे जो return है वो तो कम हो जाएगा because your assets have become non-performing and at the same time ROE ज़्यादा decrease होगा because of leverage, right? Why? Because see, leverage means if you are using the debt kind of funding and your assets have started not giving you the income or they have become bad, so your income has decreased but your expenses remain at the same level, right? So yes, the ROA would be impacted, but ROE would have much larger impact. Why? Because in the case of ROE, what you are talking about is the income which is available to equity shareholders. That will reduce much more as compared to the net profit which we are using for calculation in return on assets. Return on assets में हम क्या use कर रहे हैं? आप यूज कर रहे हैं आपका सिर्फ वो पार्ट जहां पे नेट प्रॉफिट लिया गया है न्यूमरेटर में. Whereas in the ROE what we have used is your income available for the equity shareholders, right? Now, if two banks have identical ROA but different leverage, what you can infer about their ROE and their risk profiles? Bank with higher leverage will have high ROE and high risk. Bank with higher leverage has lower ROE and lower risk. Both banks will have similar ROE but different operating margins. Lower leverage banks have higher ROE and higher risk. See, I have net profit that will impact my return on assets. But after that, how I have chosen equity and debt, this impacts my ROE. ठीक है, ये मेरे ROE को impact करता है. If I have used more debt, that means more leverage, it is going to give more return to equity shareholders. ठीक है, तो यहाँ पे that is why the correct option is the bank with the higher leverage will have the higher ROE and the higher risk. Right? Now, suppose a bank decides to increase its holding of the SLR due to regulatory requirement. तो अब इसका क्या impact होगा profitability and risk में? See, SLR securities, they are obviously risk free practically. So, risk is going to decrease, no doubt. But the profitability will also decrease. Because suppose if I have 20 rupees and if I would have given it on loan, I would have earned more. But because I invested these 20 rupees in the government securities, I am going to earn a bit less. So my profitability is also going to decrease. Now, a bank's assets increase from 1000 crore to 1200 crore. What is it when its net income remains constant? Asset बढ़ गई है लेकिन net income उतनी ही है. तो अब ROA के साथ में कैसा होगा? ROA is obviously going to decrease because your denominator has increased while your numerator has not moved. आपका numerator तो move किया ही नहीं, whereas your denominator has increased, right? So ROA is obviously going to decrease. Which combination is most likely to result in strong and sustainable bank's profitability profile? So, high leverage, narrow spread, high operating cost. Basically, we want low leverage, high interest margin and controlled cost. This is the best case scenario. ठीक है, सब कुछ यहाँ पे best है. Next is a bank maintains a leverage ratio of 25:1. Which regulatory or strategic issue it is most vulnerable? See, you have so much debt capital with you that even if there is a minor asset value devaluation, it would lead to capital erosion because debt you anyway need to pay. But the equity amount that you have invested in the business is going to be reduced very fast, right? So that is the most vulnerable thing to do. Now, which of the following statement best explains why a singular focus on cost cutting is not a sustainable long-term strategy? See, cost cutting is always not good because cost cutting leads to short-term profits that can be reinvested. Reduced cost always equate to improved customer satisfaction. Excessive cost cutting can undermine the bank's ability to respond to market needs and prepare for future demand. So that is the correct thing, right? That is why it's not, cost cutting is not a very good long-term strategy. Then a bank that identifies low margin business lines and exits them while entering most cost effective lines like the specialty finance or payment processing. Which strategic area of the efficiency have improved? Channel optimization, business realignment, product bundling or vendor management. See, you are identifying the low margin business lines and you are exiting them. Clearly, the option number B is the correct answer. What we are doing is the business realignment. That means strategic exit from the low margin activities and investing in those kind of activities where margins are good. Now, how does technology and automation improve both operational efficiency and customer experience? So by enabling the parallel processing, reduced delays and supporting these self-services. Like you might have seen, there are chatbots in the banking industry. They help you out in case the customer service executives, they are busy. So yes, supporting self-services, these are the tech enabled options that is helping to increase the efficiency and the customer experience. Now, which of the following best describes how banks can effectively use the cross LOB data sharing to improve the profitability? So, when you share the data, it creates a 360-degree view for the customer for better targeting and marketing. So, that is why it is important. So, if you have got cross LOB data sharing, it helps us to generate 360-degree customer view so that we can provide the customer specific options like mutual funds, insurance products, etc. Now, a bank redesigns its branches to offer a modern, engaging physical environment while integrating the digital capabilities. So, now what kind of strategy it is? It is an innovative bank branch design, right? Where you are designing the branches for the physical environment as well as the digital capability. Next, we are having which of the following best illustrates how big data enhances both operational efficiency and risk management in the banking business. So, it enables real-time fraud detection. We get customer insights and optimized cross-selling also. Next, we are having why is the vendor management is the critical area of efficiency, because over here we can match the strategic objectives and we can regularly evaluate it through scorecards also. That is why vendor management is important. Now, what is the primary strategic benefit of using the real-time cross-selling and upselling based on the customer life events? So, now out of this, why it is helpful in the real time? Because we can improve the customer relationships by giving them the offers which they actually require. So, real-time marketing leverages life events like the home purchase, marriage, etc. We give the relevant offers and this deepens engagement. The customer stays with the bank for a longer time period. Now, which of the following is a statement about the sophisticated customer segmentation is the most accurate, right? So, over here, combining the behavioral, demographic data, psychographic data, it gives us the better customer, or it is called as sophisticated customer segmentation, where we are dividing the customer on the basis of behavioral, demographic, psychographic data. We make it all available for the data analysis. Now, how does the innovative reward design contributes to the increased profitability? You might have seen that for every increased spends, you are going to get the reward points. This is there on some debit cards also, credit card also. So, what is the benefit of this, right? Eliminates the needs of customer service? No. Increases operational overhead? No. Encourages loyalty among profitable clients by offering the redeemable rewards? Yes, this is correct, right? So, this is the benefit of the reward points. Now, what is the following statement best explains why a high CASA ratio is critical? See, it shows CASA ratio means your current account plus savings account deposits divided by your total deposits, right? Basically, what we are trying to measure is that what are your total deposits and out of which how many are, what is the value of current account deposits and your savings account deposit. Why? Because the savings account minimum thing, right? Minimum interest, and the current account practically zero interest. So, if you have got the high CASA, what does that mean? So, CASA deposits reduce the bank's overall cost of funds, because in the current account, the bank does not have to pay practically any in kind of interest. In savings, it has to pay the interest, but the interest cost is less. If you compare it with the fixed cost, the fixed tenure or the term deposits, it is comparatively lesser. So, if a bank has access to the current account and savings account deposits more, then it means the overall cost of funds for the bank is going to reduce, right? Now, how does inflation typically affect the profitability of Indian banks as per the macroeconomic factor analysis? So, yes, it negatively affects the profitability because the margin pressure comes in. Whatever you are earning, inflation has a role to play in it and it reduces the monetary value of your margin. Now, which step is essential for ensuring long-term sustainable improvement in branch profitability? So, over here, continuous monitoring and using of your key performance indicators will help you to identify your strength and manage your weaknesses. So, suppose if the digital connectivity is one of your weaknesses, you can identify it through key performance indicators like how many times the system have failed during the current month. So, this is a key performance indicator. Through this, you can improve the branch profitability. Now, why is one size fits all strategy not effective for improving profitability across all bank branches? So, all the bank branches, they have got unique markets, goals and operating conditions. Like a bank branch in the Mumbai would have different market realities, different kind of high value customer in comparison to, let's say, a branch in Kanpur, right? So they do both have the different kinds of customer needs, customer aspirations, customer values, and that is why the profitability for all such kind of branch is going to be different. Now, which of the following practices is least likely to directly contribute to improve brand profitability on the basis of the, so aggressive lending without focusing on the loan quality is going to be very much detrimental for you. Now, what is the rationale behind branch specific customer acquisition and retention goal instead of applying a uniform growth targets? See, just now we talked about that it is very much important that you have a tailored approach because customers are different in different kinds of branches. So that is why potential is also different. Then we are having what is the recommendation of credit deposit ratio for a bank branch to be considered optimally productive and profitable. So 70% is the ideal credit deposit ratio which a bank branch should be having, right, which is considered as healthy and profitable. See, out of this anyway you have to put some amount in CRR, put some amount in SLR, and then you make some investments, safer kind of investments in the government security for liquidity purposes also. So that is why credit deposit ratio of 70% it is considered as an ideal one. Now, which of the following is not one of the suggested strategies to identify the best new prospects opportunities for a bank branch? See, you don't, there are different kinds of dynamics like understanding which type of customers are attracted, identifying specific customer segment, using data driven outreach program, everything is correct. But the foot traffic and existing relationship, this is not the ideal thing to see. You have to see the other parts to identify that whether we need to have a branch or not. And what is the recommended maximum limit for cash holding at a bank branch to ensure the cost efficiency? So it is recommended that less than 1% of the branch deposits, this should be the maximum cash holding by the branch, because beyond this you will become inefficient. आप inefficient हो जाओगे, and that is why you should do like this. So this is it in this particular class. We have covered the important questions that needed to be covered from module A. Thank you so much, and you'll get the PDF in Telegram.